What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe, hit the notification bell so you don't miss future videos. So I have 3 dividend growth stocks to buy right now. They have consistent dividend increases. These are companies in demand. People buy these products like crazy at the store. All you have to do is look at somebody's shopping cart and you will see these logos like crazy. These are all products that people consume. These are foods. I'm telling you, these people buy these like crazy. You probably have these in your house right now, and you don't even realize that these are really good dividend stocks with decent dividend yields, consistent dividend increases, and and they're in demand because people need to eat. And I tell you what, man, Thanksgiving, I had so many food comas, like you wouldn't believe it. Like yesterday and today, like with family. And guess what? One of these companies I had for breakfast. So I'll go over that with you guys. So make sure you smash that like button, hit that notification bell. Let's check these stocks out right now. Here's the first stock, JM Smucker. I just had this product today. I just had toast, and then guess what? I had a little bit of jam with Smuckers on it. So these guys are based in Orville, Ohio. They are so known and well known with their jam that people put on their toast. So you probably see that logo like crazy, uh, with people in the store or on the shelves that people buy. I mean, this is a very popular product that they have. They have a lot of products with Smuckers, and they have a dividend yield of 3.02%, which is very attractive. They're sitting at $130.95. They really haven't beat the S&P too much, which is nice. And they're a little stagnant. They're not just going crazy or anything. So their year range is 110.53 to 140.65. Again, a 3.02% dividend yield, and its market cap is 14.19 billion US dollars. So you guys have consistent dividend increases. Day trading, I don't know about that, but this is a great dividend stock, and I'm going to show you why with its dividend increases. Let's start off in 2013. It was sitting at 58 cents. 2014, it hit 64. 2015, 67. 2016, 75. 2017, 78. 2018, 85. 2019, 88. 2020, 90. 2021, it hit 99 cents, and it has just about a 2.99% dividend yield, a really good PE ratio, 18.73. So this is a company that's in demand. And again, you're seeing consistent dividend increases. I don't need to go over the revenue because these guys are in demand. People buy this like crazy. This is a really good dividend growth stock. You're basically getting yourself a raise. So this is one that is definitely on my radar. I like the 3 to 5% dividend yield range, but I like the dividend increases, which make these guys very attractive. They're not too bad sitting at 130.95. Let's jump to the next dividend stock. That next stock is Kellogg's. It's sitting at $63.64. Has a dividend yield of 3.65%, which is pretty attractive. PE ratio 17.36, volume 1.77 million. Market cap is 21.56 billion US dollars. Year range was 56.61 to 68.60. Day range 63.25 to 64.17. So it's not jumping up too much, not beating the S&P, which makes these guys attractive. Now, when I think of Kellogg's, I think of cereal. So that's a big thing that these guys are for people that wake up and have breakfast instead of driving somewhere. You have Kellogg cereal, which is very attractive and is a dividend stock. And how many times do you see people in the shopping cart carrying this on their cart? You'll see the Kellogg's logo right there. Same thing with Smuckers. You'll see the Smuckers logo right there. I mean, these go hand in hand. Some people will get cereal and then they'll get toast with Smuckers, which make these guys very attractive. And I'm telling you, these guys have been on my radar. They're not too expensive. And again, a 3.65% dividend yield, and it's not jumping up too fast. I have to show you its dividend history. Look at this. 2013, it was 46 cents. 2014, 49. 2015, 50. 2016, 52. 2017, 54. 2018, 56. 2019, 57. 2021, 58. So right at 63.64 with a dividend yield of 3.67% and a P ratio of 17.35. Annualized dividend is $2.32. So if you're looking at the trends, this is what's attractive. You're seeing increases from 2013 to 2021. And I'm telling you, when I look into food stocks, this is what I like. I like consistent dividend growth. And again, it's not doing too well against the S&P. It doesn't look like a really good day trading stock because it's not increasing its price per share too fast. Traditional Roth IRA material, I don't think so because look at its um, dividend yield, which is not bad. But look at its price per share, not jumping up too fast. Sure, you're getting dividend increases, but I like to see a continuous price per share increase and the dividend increase. So really good dividend growth stock that is traditional Roth IRA material is of course Apple. You're getting stock splits, you're increasing price per share, you're getting an increase in the dividend. So that's one thing to look at with certain type of stocks, especially Apple or other stocks. It's like basically you're putting money in and your money's making money and you're increasing the price per share, but you're not seeing this with Kellogg's, you're not seeing this with Smuckers. You're just seeing nice dividend increases. And I can tell you what, stock like this that's kind of stagnant sitting there, how can you say no to that? Increasing its price per share, and it's not, at a slow pace, and it's increasing its dividend at a very fast rate. That's beautiful. I don't, it's less than $100. So that's the thing that's very attractive about these guys. Let's jump to the final stock. That next stock is General Mills, the symbol GIS. So it has a dividend yield of 3.25%, a PE ratio 16.66, market cap 38.34 billion US dollars. Not jumping up too fast, not jumping up or not jumping up to where I can't afford it or anything like that. Again, none of this is financial advice. It's for entertainment purposes. Only disclaimer in the description. And look, I mean, it's not good day trading material. It's not maybe traditional Roth IRA. Took a little bit of a dip, a little stagnant, but my gosh, you're increasing the dividends and you're that same price. How do you say no to that? It's like you're building up a retirement pension. And this is what's really nice about these guys. You know what? I'll give you one more dividend stock after this as a bonus stock. Let's check this one out with its dividend history. Oh, yeah. Look at this 38 cents, 2013, 41 cents, 44, 46, 48, 49, 51. So it hit 51. It was 38 cents in 2013 to 51 cents in 2022. That's very attractive. With a 3.22% dividend yield, annualized dividend of $2.04. That's just for buying one of them, the annual dividend. So this is what you're getting. You're seeing growth with the dividend, and that's very attractive. And these guys are in demand. I'm going to give you my bonus stock. Here's my bonus stock, Conagra Brand. So I own this one. Symbol is CAG. PE ratio is 12.76. The dividend yield is 3.96%. Has a market cap of 15.16 billion US dollars. Its year range was 3052 to 3909. So what I like about these guys, a lot of their products that they carry, I have done a few videos on them. I'm looking, my cooking spray has Conagra Brands on it. A lot of my frozen veggies that are you can put in the microwave and steam, those are Conagra Brands. You'll see the logo on it. So these guys have a lot of products that people need and go to the store. So all four of these companies, people are putting on their shopping carts and buying like crazy. So that's the beauty of that. And I have to show you this dividend history. It's so nice. 2017, it was sitting at 20 cents, and then it hit 21 cents. Then 2020, it hit 27 cents. Then 2021, later, it hit 31 cents. So you're seeing a nice 3.96% dividend yield currently. It's at $31.60. The PE ratio 12.74. Annualized dividend of $1.00. You're seeing dividend increases over time with these four companies, which makes us very attractive. I am long on Conagra Brands. I own that one. The other ones are on my radar. So I'm just giving you, the scouting report and the lowdown on these dividend stocks that have consistent dividend increases. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to post a special video while I'm at work and two rivalry companies. Ohio State, my team that I love, is playing at Michigan. So we're going to have a little red versus blue video with two rival dividend companies that are um, neck and neck. It's either you like one of them or you don't. So very interesting. I'm going to compare both of these juggernaut dividend stocks and take a guess. Red versus blue. Write that. Pick in the comment section which ones you think that is, and let me know what you think of these four dividend stocks. So again, if you're new, make sure you subscribe and hit that notification bell so you don't miss future videos. Smash that like button, and you gotta hit that notification bell because I throw random videos. Sometimes I'll say, I'll post one on Wednesday and all of a sudden I'll have time and then post one Monday and Tuesday. So, I'm just giving you a heads up on that. So you got to hit that bell. All right, take care.